Welcome back to LinkedIn Editors Live at the Milken Institute Global Conference in Los Angeles. I'm Caroline Fairchild, and joining me now in the studio is Kara Nortman of Upfront Ventures. Kara, welcome to the show.
Thanks for having me.
So you're here talking about a wide variety of topics, but I want to start talking about the private market right now. We saw in 2018 over $100 billion in investment go into the private market. What does that mean for your work at Upfront and how you're thinking about finding those winners?
Yeah, I mean, our work is relatively similar in the sense that we come in at the earliest stage. We're usually the first institutional board member, what we used to call Series A, what we now sometimes call institutional seed. And so for us, it's about the human being more than it is about the metrics and the product market fit. I think often metrics are misleading at that stage. And so for us, we, of course, look at those things, but we run specific theses. We're going to talk about one in a second. We sit in Southern California as the largest fund here, and we really just try to get to the best founders who are looking, share our values and looking for a long-term committed partner. That commitment has extended, right? The private markets you used to go public after 3 to 5 years, and now it's more like 10 to 12 years. So it's ever more important that you choose a partner who you want to work with over decades, because inevitably, it's easy when things are going well. It's when things are not going well, who's going to sit down, give you energy, do the hard work, and really care.
And I see that a lot of venture capitalists who do say they're founder focused. They want to find someone who's in it for the long term. You talk about how you have to stick with these founders for longer than you used to. What are you actually looking for when you sit down with founders in terms of if it is a good partnership?
Yeah, I mean, I really try to get into the human side of the experience, which I think a lot of people say, but not as many people really dig into that piece. It's really easy to get very transactional. What did you do? What are you doing? Where's the social proof? How can I sell it into my partnership? And really what I try to do is understand, why are you doing this? Why did you choose the people you're working with? What does success look like to you? What's gone really poorly? And then, I mean, we have this saying now in venture, particularly at the early stage, which is not just product market fit, but it's founder product market fit. And, you know, it's really trying to understand core motivations and do they have enough confidence and enough self-awareness to want to do this thing. And then for me personally, I'm an extremely passionate, optimistic, excitable person. My partners keep me, keep that at bay at times. And I always say my test is, am I driving my husband crazy? Am I talking about it, on Saturday nights? Am I researching it at 2 a.m? Can I not control my curiosity around it? And I always tell the founders, I may know quite a bit coming in, but I won't know quite a bit about you and your business. And so I'm happy to shoot from the hip, but I hope to add a lot more value after 6 months, and I hope to think about it and run on it and give you maybe an insight or two that would be useful in the year. So I really also focus on like the batting average and how well you'll work with that founder to get them the most valuable advice, people, team members.
And with 2018 being dubbed the year of the unicorn IPO, we're seeing a ton of these billion-dollar companies heading towards the public markets. Does that impact your work on the ground at all?
I mean, it does, of course, because I think once you get to, because for a couple of reasons. One, more money is coming into companies earlier and earlier, and I think you have to specifically look at this company in this industry and say, is capital a positive? Is a lot of capital going to allow them to go faster? Have they figured out where to pour that capital such that they can win? Or is a lot of capital likely to distract them? And in an industry where you have to be more disciplined, SaaS, if it's working, more capital you can tend to put to work and build out that distribution. E-commerce, on the other hand, too much capital too early, you might convince yourself that you're investing in CACs and paybacks that make sense, but it might take a little bit of time, and there tend to be a lot of competitors. I also would say at the later stages, once companies are doing well, you have a lot of options, and the questions become, do you take hundreds of millions of dollars with a lot of structure? Do you take less money with less structure? How are these people going to behave over the long run if markets turn? And so those are things I think we become advisors to our company, because companies we're usually the earliest in. You have to consider them, but in the very beginning, in the first 2 or 3 years, it's how do you get the right people on the boat? How do you define whether or not your product has found its market? And then how do you begin to scale? And then all of those bigger questions come to play.
A lot of those bigger questions that you're trying to answer right now are on this investment thesis about the future of work, which is a big topic on LinkedIn. How are you thinking about investing in the next generation of companies who are going to shape what work looks like moving forward?
For sure. Well, so I was trained in my early days at Morgan Stanley, Battery Ventures, and even IAC as a thesis-based investor. So I use theses to hunt, and then I make a decision based on the person. And the three theses that I'd say I'm spending the most time in right now are skilling and reskilling, retention and collaboration, and then what I call identity. And the wing would fit into this one, but it's kind of this idea of the future of work is really the future of everything. It's a huge part of what we all do with our lives, and how do we build and find community to want to stay at companies, to switch jobs, to find the mental energy to reskill, and I think that's a really important and still underserved piece of the market.
Let's dive a little bit into that reskilling and retraining bucket.
Sure.
It's top of mind for many of the leaders at this conference. What are you seeing at the early stages in terms of innovative ideas to get workers ready for the next generation of jobs?
Yeah, absolutely. I'm seeing some really interesting stuff right now. I wish I could tell you guys all, but I'm happy to see more. A lot of what I'm seeing right now that is exciting to me is how do we skill and reskill for non-tech jobs?
Okay.
How do we skill and reskill for the like the things that make us a human being that are unlikely to be automated? And these are things like empathy and emotion, ability to understand context, broad-based critical thinking. These sound soft and fuzzy, but there are actually ways to solve for this, and then to create training courses which are a specific, more tactical skill set for the right now in places like healthcare, IT, security, sales. These are the places where you have the most job growth. There's of course a ton of interesting things going on in coding, boot camps, income sharing agreements, kind of pushing people into that area. But I think we tend to try to solve for the problems that are most familiar to us. And that's an important one, but there are many, many other ways to train people and to create business models to fund that training, to skill for the millions of jobs that are popping up in other industries. And
under this thesis of community, the workplace is more diverse than ever. In 5 years, 60% will identify as non-white, half of the workforce, more than half, will be female. What do we need to do in terms of getting the workforce ready to work in an increasingly collaborative environment where we all kind of come at it from a different perspective?
Yeah, I think a lot of it sort of starts with don't just hire one, hire two. Don't just hire two, hire five. Of whatever that diversity is. I think that's one piece of it. I think another piece of it, and I can get into technology solutions as well, but another piece of it is don't bring in people who look different and then train them to act the same. And that's a really hard thing to navigate. I mean, it's hard for all of us. Those of us who are leading and leading from the front, I think we sort of will feel good about bringing in a woman or somebody of a different ethnicity or sexual preference. And then they have to learn, particularly in jobs like venture capital, the 1,000 norms. It's an apprentice job. It takes a while. How do you make sure they also hold on to who they are and how they see the world? Because more than likely you'll be sitting in a meeting, whether it's at a big company or at a venture capital firm, and you'll have a different thought, and it'll be different than everyone else around you, and you're going to say, I'm probably wrong. And how do you allow people the space to say things that may not land properly or be different once they are trained? And then I think from like a technology standpoint, or just a metric standpoint, the earlier you measure these things, the better. We have an inclusion clause in our term sheets. We were, I think, the first to put it in, didn't talk about it, and just did it. And that clause basically just shares our values with our founders. And one of the things that happened in the first term sheet I issued about 2 years ago with it is that one of the founders just started reporting on it. What is the composition of my team? How do I think about diversity? I didn't ask him to do it, and it wasn't him. And he has built one of the most diverse teams early. It's much easier to do that when you're at your first 3 people versus when you're tens of thousands of people and you realize you have a problem.
And this is something that you are trying to solve head on through your work with All Raise, which is a nonprofit trying to get more female funders into venture capital firms, as well as more female funded on the entrepreneurship side. Tell us what's going on there, what's working on that end in terms of getting venture capital and also entrepreneurship more equal.
Absolutely. So our goal is to double the percentage of founders and funders over the next decade, right? And I think we all know the stats. 2% of CEOs are women, 15% of founders are women, and 9% of partners at venture capital firms. I'd say the first thing that's working is actually just the collaboration. So we now have most of the women in venture who are a part of All Raise and working together and building relationships and actually helping each other behind the scenes. The same thing is happening on the founder side, and then we're bringing it together with things like female founder office hours and the like. So a lot of it is just building the connective tissue so we can proactively help each other. We're also getting, companies funded and celebrating companies that are going public, like PagerDuty and the like. So we've seen the data move. On the partner front, it's moved a couple percentage points. There's some very big and kind of well-known firms that have hired a bunch of women in the last year. I know they've been looking to do that for a long time, but I think the pace of that is accelerating with the carrot, right? Because we also have a careers platform where we try to move women around and get them into firms and just build a diverse set of candidates. So that's a lot of the work we're doing. And then one of the areas I think is the most interesting is we've actually built cohort programs within Allraise where women who come into venture of the same vintage year connect with each other, and it's almost like a mini YPO kind of experience where you're building your future, back channeling, sharing, investments, et cetera. And so those are the sorts of things that are starting to play out. I mean, I just invested in December in a company called The Wing with Jess Lee from Sequoia, and Jess and I, Jess was a huge advocate of mine in the process, and Jess and I accelerated the time frame in which we became respectful of each other's work, mind, effort in a year, whereas that might have otherwise taken a decade.
Right. I'm going to go ahead and take a question from the stream. Jasmine Tang wants to know, what is it like to be a VC in the age of SoftBank's Vision Fund?
There's a lot of big growth funds now, right? It's not just SoftBank, it's Sequoia, Bessemer just raised over $1 billion. There's a lot of funds with multi-billion dollars putting multi-billions to work. And I think, again, it's one of those things, when you get to a phase where you're in an industry where capital really is an advantage, you have to consider. And you have to say, and most firms that have an option with SoftBank have an option with somebody else. And you have to look at both options, and it's very specific to that company, that founder mentality, et cetera. But because companies are staying private for so much longer, essentially public market dollars have moved into the private market. And so candidly, we need big pockets of capital if we're going to fund innovation in this way, and SoftBank is doing that as are a number of others.
Mm-hmm. And speaking of capital, the theme of this year's Milken Conference is driving shared prosperity.
Yeah.
What does that mean for you in terms of the work that you're doing at Upfront? How do you think about that theme?
Yeah, I think one of the things, if you ask a venture capitalist, what do you invest in, or what do you do, you'll usually hear industry, you'll usually hear business model, you'll usually hear geography. I personally think the next frontier is talking about values and who are the types of people you want to work with, how are you going to hold each other accountable as a minority investor, how do you reflect those values to the world, and it's a thing I'm very focused on defining. I feel like we do it at Upfront. I always say we're 6 partners, we have the same back end, we have a different user interface, you just have to find the interface that's right for you, but the integrity of how you do this job is really important to me, and that's why I joined this firm. And so you look at macro trends like, $20 trillion of wealth moving from baby boomers and men to millennials and women, right? The types of people who are putting money to work are changing dramatically over the next 10 years, and I think we're moving from pure profit-driven investing to more what does sustainable values-based investing look like? And the public markets and the later stage funds are really leading the charge there with the Rise Fund and BlackRock and the like. So that, to me, if you can, as a venture capitalist, care about how you run your own team, recognize we all have strengths and weaknesses, how do we make each other better, how do we really acknowledge what our values are and convey that to founders and build a relationship around that, I think that is what will set up venture firms to be the best in the next decade.
Great. Kara, thank you so much for joining us.
Thanks for having me.